Greetings, children. Welcome to my channel, Inside Accountancy by Shakun. Today we'll be talking about Chapter 2, Basic Accounting Terms. As I've already told you, that these basic accounting terms are very important to be understood by a student of accountancy. These terms they make the foundation of accountancy and are used in majority of the transactions or majority of the accounts or the principles. So a child should have a proper understanding of these terms before understanding that how the transactions are recorded. In this video, we'll be talking about the basic terms such as goods, stock or inventory, purchases, sales return, debit, and credit. Let's talk about the first term, that is goods. Now, goods are the physical items of trade. They are the physical items of trade means they are either physical in nature, that means they are tangible products which can be seen, which can be touched. So these are the physical items of trade that are purchased in order to be sold. The term applies to all the items making up the sales or purchases of a business. So these physical items, they are either purchased or sold and they make the total purchases or total sales of a business. They are the stock in trade of an enterprise, purchased or manufactured with the purpose of selling. For example, a enterprise which is dealing in home appliances such as television, fridge, air conditioner, microwaves, etc. All these things are goods for that particular enterprise. For a person who is dealing with stationery, then pens or registers, etc., would be goods for them. So, goods are those items basically in which the business is dealing in. So, depending upon the nature of the work, the goods may be different for different businesses. The next item is stock or inventory. Stock or inventory is a tangible asset, something which can be seen, which can be touched. It is a tangible asset which is held by an enterprise for the purpose of sale in the ordinary course of business or for the purpose of using it in the production of goods meant for sale. So the stock means the company, if holds certain goods with it in order to carry out the production process or to sell it in future, that is referred to as stock or inventory. Now, stock may be opening stock or closing stock. Opening stock is the stock which is available with the business in the beginning of the accounting year, whereas closing stock is the stock in hand at the end of the accounting year or the accounting period. Stock or inventory may be of following kinds. It may be stock of raw material, stock of work in progress, and stock of finished goods. Stock of raw material means it comprises the stock of raw material which may be used for manufacturing of the goods which are lying unused. For example, if an enterprise is involved in manufacturing shirts and they have cloth with them, so that cloth comprises the stock of raw material which will be used for producing the finished product. Stock of work in progress means that stock which is still in the process of being finished. That is, they are partly finished goods. They are yet to be completed, yet to be finished, and then they can be sold. So they are neither the raw materials nor the finished goods. So that is why they are called as work in progress. Now, stock of finished goods are those goods which are available with the enterprise for being sold to the customers in future. So the stock of finished goods are those goods which are available for sale. Let's move on to the next term, that is purchases and sales. So these are two separate terms since they are linked. So I'll be showing them together. Let's talk about purchases first. The term purchases is used for an account to record purchases of goods or raw materials for resale or for producing products which are also to be sold. So all the purchases of goods, whether those purchases are for further sale or whether those purchases are for the raw material to be converted into finished goods, all these are recorded together under the main heading purchases. Now the term purchases includes both cash and credit purchases. Goods purchased for cash are termed as cash purchases, and when the goods are purchased on credit, that is, the payment is not made, it is termed as credit purchases. Let's talk about sales now. The term sales is associated with or it is used for the sale of goods. These goods may be purchased for resale or manufactured by the enterprise. These saleable goods are purchased by the organization to be sold to the customers or to the enterprises. Again, the sales also may be cash sales or credit sales. When the sales are made for cash, that is, cash is received from the sales, then they are called as cash sales. And when the sales are sold, when the goods are sold on credit, that is, the amount is not received from the customer, then it is referred to as credit sales. Let's move on to the next terms: purchase return and sales return. Let's talk about purchase return first. Now, the goods which may be purchased by an enterprise, they may be returned to the seller for any reason, such as they may be defective, they may not be according to the standards of the enterprise. So, such goods may be returned by the enterprise to the seller, and this is called as purchase return, returning the purchases that you had made. This is also called as returns outwards. Why outwards? Because these returns, the goods are moving out of the business enterprise, they are going out. That is why we call them returns outwards. Let's talk about sales return now. Now, the goods sold when returned by the purchaser to us, to the firm, to the enterprise, then they are termed as sales return. So, when we make the sales and the customer or the purchaser returns the good back to us because they are defective or not up to the mark, not up to the standards, it is referred to as sales return. Now, sales return is also called as return inwards because the goods are coming back into the enterprise. That's why it is called return inwards. So, purchase return and sales return. Moving on to the next terms, we have cost of goods sold. Now, cost of goods sold is the direct cost which is attributable to the production of goods sold or services rendered. So, whatever goods we are producing or whatever services we are rendering, the direct cost which is associated with that is referred to as cost of goods sold. Now, it is used for gross profit calculation. The gross profit can be calculated by subtracting the cost of goods sold from sales value. So, sales minus cost of goods sold gives us the gross profit. Moving on to the next terms, debit and credit. Let's talk about debit first. Now, an account has two parts. One is debit and the other is credit. The left side of an account is the debit side, while the right side of the account is the credit side. If an account is to be debited, then the entry is posted to the debit side of the account. It has been derived from an Italian word debito. Similarly, credit, again, since the account has two parts, the right side of the account is referred to as credit. Entry is posted to the credit side if an account is credited, and it has been derived from the Italian word credito. So, debit and credit are the two basic important terms on which the whole of accounting rests. So, every transaction has a dual aspect. Every transaction has two aspects, just like a coin has two sides. Similarly, every transaction has a dual aspect. One aspect is called as debit, and the other aspect is called as credit. In this video, we have talked about the meaning of goods. Goods are the physical, tangible things in which the business is dealing in. We talked about the stock or inventory, which is held by the organization for sale in future. We talked about purchases. We talked about sales. Purchases and sales refer to the total goods that have been purchased or the total goods that have been sold. We talked about purchase return and sales return. Purchase return were the goods which have been returned by the seller, and sales return is referred to as the goods which have been returned by the purchaser. We also talked about debit and credit, the two aspects of accounting. I hope the concept was clear to you. If you liked my video, please like it, subscribe to my channel and hit the bell button. It will really motivate me to upload more and more content. Thank you so much for your cooperation.